Everyone, welcome back. Today we'll be doing a really long video, to be honest. It's going to be at least 1 hour long. We're going to go for a lot of cryptos today, so it's going to be quite a fantastic live stream, to be honest. But yeah, some of the top coins that we have to go through are the main candidates, to be honest. Such as Polygon, Solana, Avalanche, Polkadot, Chainlink, stuff like that. But we've also got some other interesting things to go through as well. But we've also got some other interesting things to go through as well. So yeah, where can we get started? We'll probably just get started with some other interesting things. We'll probably just get started with some of the biggest. So yeah, where can we get started? We'll probably just get started with some other interesting things. We'll probably just get started with some of the biggest. So yeah, where can we get started? We'll probably just get. Yeah, so we'll most likely just jump into some recent news in the crypto ecosystem. For anyone who's watching, just keep in mind that you can recommend a crypto to review. Any new cryptos that you'd like me to talk about, feel free to recommend it, because I'm looking for new cryptos to review. Obviously, we've talked about Gala quite a lot, Phantom. These are some of the trending cryptos at the moment. And we've talked about most of these. So now I'm looking for new things to review. And people are always trying to suggest new coins to review. So if you're one of those people, this is your chance. This is definitely your opportunity to suggest something new. So Gala is trending. That's a big thing. So let's check out Gala to see if there's any recent news in the Gala token ecosystem. It looks like there's low volume in Gala. I'm not gonna lie. This is that there's low volume, which is kind of weird because the 24 hours trading period is over 1.2 billion. So that's not low volume at all, but numbers are saying something completely different. So yeah, for the first 5 to 10 minutes of this video, we're literally just gonna warm up, just start with some news that's going on lately in the crypto world. And there's not a lot, to be honest. There's not a lot of there's a lot of news, but there's not a lot of like exciting news that's sending the market into complete disarray. There's the news right now is just kind of chill, to be honest. It's really chill, which isn't necessarily always a good thing. Not for us, because we want new and exciting things to review. We want new and exciting coins to review. Honestly, I don't even feel like reviewing any of the trending coins, because I don't even know how important these coins are. Most of the times, I feel like just reviewing some of the more notable coins, I'd say. So that's what we're gonna do. Obviously, we're gonna take a look at the top ones: Avalanche, Terra, Solana, and see what's going on in their ecosystem, because I'm curious. Any big news? Any big news on Blockworks? The investor guide to your own finance. Solana protocol gets 3 million in seed funding with aim to bridge DeFi margin trading. That's interesting. So I guess we could talk about that. We could also look into Solana a little bit as well, because it's on our list of coins to watch right now. It's definitely on our list. We're also going to probably go down to the top 200 coins in the world and find some tokens to review, because most of the top 100 tokens I've already reviewed. I've already spoken about. Geez, when's the last time you heard something about Mina? Mina protocol. It's been a long time. It's been an absolute long time. But in more important things for Solana, currently at $84.69. It's quite interesting because in the last 24 hours, it was just above $92.73. So that's quite interesting. In the last 7 days, it was actually above $100. That's good to know. So we're going to go to the website and check out that as well. See if there's anything Switzerland-based index provide offers DeFi exposure. Interesting. So we're going to have a little bit of news, a little bit of look at the Solana ecosystem, and of course the Solana blog. That's where we're going to get our latest news. Wow, I just love the Solana ecosystem because they've got so much things that are going on within the Solana ecosystem. Top Web3 apps that include Brave Browser, and I'm actually using Brave Browser right now as we speak to make this video. It's actually quite interesting. So yeah, let's go to Solana Labs. So what have we got going on with Solana? Solana Pay ushers in new payment era. Welcome to Solana Riptide Hackathon. Interesting. Introducing the Solana Hacker House. Okay, so some of this news I already knew about. So let's jump into this one. Solana Pay. We're also gonna have a look at the Solana protocol, 3 million in seed funding as well, and of course pricing, right? Like I was saying, over $100 in the last 7 days. In the last month, at the ceiling, $121 for the ceiling for Solana. It's within the last 30 days, and let's remind ourselves that it's actually this month, February. It's actually coming to an end. You know, March is just around the corner. And before you know it, March will also come to an end, sadly enough. You know, that's just typically how it goes. March in, March out. But in other news for Solana, for the last 3 months, it's just been going down. And to be honest, that doesn't worry me. If anything, that makes me excited, because it's getting cheaper. And let me just say that this is not financial advice. It's strictly for entertainment purposes and for educational purposes. But it is going down. It is going down in volume. And ultimately, I think that's good. I think that's really good, because for the longest time, Solana has been just an absolute beast in the world of crypto. It's just been incredibly high. So naturally, it's nice to see that Solana is coming back down in price, because people like me, we want Solana to come back down in price, because we want Solana to be cheap, because it's such a valuable crypto. So at its all-time high, $258, and now it's literally half that price. It's more than half that price. It's actually quite incredible. So last time Solana was at $75 was last year in August. Just think about that for a moment. And let's not forget that at around the middle of August, it was $44, right? And that's just incredible. But the craziest thing is that obviously in June and July last year, crypto market was doing really bad. Worse than it is right now, way worse. Solana was $23 per coin. So question is, Solana is going down. Will it go as low as $70? That's what I'm looking forward to. That is what I'm looking forward to. So in other news, Solana-based protocol has an ambitious target of 1 billion in volume by the end of the year, with hopes of simplifying margin trading in DeFi. That's quite interesting. So basically, they've gotten a $3 million in seed funding with aim to bridge DeFi margin trading. That's quite interesting. And why exactly is it interesting? Well, let's have a look. Multicoin Capital and Pantera Capital co-led a 3 million raise for Solana-based DeFi margin protocol. Now, the protocol is attempting to bring institutional grade margining to institutional partners and trading firms. A Solana-based protocol has lured 2 major crypto investment firms in a seed funding round based on a vision of simplifying margin trading in DeFi. Now, according to press release on Wednesday, Multi-Capital, a Pantera Capital, co-led the 3 million round in the margin. So 3 million round in the MarginFi protocol, which also saw participation from Sino Global Capital and Solana Ventures. So what have we got here? So funding will be used to drive community and ecosystem development and launch protocol into development network, DevNet, while supporting institutional or institutions and partner integrations per release. Interesting. So while, obviously I'm reading this word for word. So while still in infancy, the protocol DevNet is slated to launch by the first quarter of this year with an aim to flesh out its interoperable cross-protocol offering. MarginFi is aiming to bring institutional-grade margin trading for institutional partners and trading firm interacting with Solana. How interesting. So trading margin refers to the act of borrowing money to buy financial assets. Traders who use margin attempts to take on leverage and gain exposure to access in a more capital efficient way. How interesting, huh? So MarginFi is expected to develop its protocol to make it easier for trader margin to manage more positions across different DeFi decentralized protocols via a single dashboard. So that's quite interesting. So it continues, obviously, which is good. So in 2021, it says, we saw an explosion of innovative financial products emerge from DeFi, said Edgar Pavlovsky, founder of MRGN Labs, the core contributing team of MarginFi. So the problem is the trading experience is now extremely fragmented across different protocols, which destroy capital efficiency and prevent traders from combining their positions into one unified account. So MarginFi will allow traders to interact with this cross-margining engine through an application programming interface to control multiple derivative positions. As an example, a trader could combine a long perpetual futures position on Drift with a short option position on Zeta and perpetual position on HXRO network. And this was all said by MRGN Labs. So this approach provides a ungraded risk framework to move quickly with exposure to underlying and trading protocols, said MRGN Labs head of growth Mac Brent Pete. So MarginFi is a way of trading firms to globalize on chain position and effectively execute arbitrage through a single account. Additionally, MRGN Labs said it's focusing on whitelisting new institutions with goals of moving 1 billion through the protocol by year end and plans on launching several traded focus initiatives in the lead up to its DevNet debut. Nice, nice. Now that's not it. That's not the only thing that we're getting from Solana today. We've got some other news um, in the Solana ecosystem today, which is ultimately quite fantastic. So where are we? So with in terms of Solana Pay, Solana Pay ushers in new payment eras. What does this mean, right? That's that's a big question today. So a new customer walks into your store looking for a latest hot sneaker release. You have it in stock and she's thrilled. She pulls out her phone and scans the QR code on your point of sale for a seamless transaction. Now the fund hits your merchant account at the speed of sending an email at near zero cost and immediately begin earning high yield interest. So before the customer leaves the store, 2 token appears in her digital wallet. The first is an NFT version of new sneakers, usable in any game or virtual world she chooses. The second is an authenticated NFT receipt, which admits her into your exclusive online community or verified sneaker lover. She's now a customer for life. 9 months later, the next version of her favorite sneaker drops. Her digital wallet has new offering reminding her of their availability at your store, along with a personalized offer on new laces she can't find anywhere else. This is quite interesting, actually. I gotta admit, it's like reading a story, but a story that's filled with really interesting things in the NFT world and crypto world itself. Quite fascinating. So it says additionally that I've heard of versions of this vision pitch to merchants, large and small, many times, from a year of American Express to my time at Google launching wallets and later Google Pay. The futuristic promise and payment, simply seamless and connected, haven't materialized. So even as our world is digitalized and ways to pay have prolificated, the dance between merchant, intermediaries, banks, and technology has only become more fragmented. So, threading the needle on a cohesive payment experience that rewards loyalty, drive repeat visits, and doesn't cost an arm and a leg simply never happens until now. So, how interesting is that? Solana Pay is bringing new innovation to the payment system. So Solana Pay, a new payment protocol, ushers in a new era of payment and commerce. So our team helped create the building blocks for decentralized, open, and truly peer-to-peer payment protocols. We believe this will pave the way for a future where digital currency are prevalent and digital money moves through the internet like data, uncensored, without intermediaries, taxing every transaction. So the core promise behind Solana Pay is that the payment and underlying technology goes from being a necessary service utility to true peer-to-peer community channels between the merchant and consumer. So the protocol provides a specification that allows the consumer to send digital account setting immediately with cost measures in fractions of penny. This embeds loyalty, offers, and rewards in the same messaging scheme and become true building block for the future of commerce. So merchants, they have long sought a opportunity to leverage deep engagement with their customers, but multiple intermediaries involved in an e-commerce or brick and mortar transaction makes that difficult. So the next phase of development of the protocol will enable merchants to send digital assets back to consumers, which opens up new capabilities in commerce not possible before. I like this. I definitely like this. I like everything that they're saying about Solana Pay so far. I really do like. So it's also important to note that this is bigger than embedding consumers to pay with crypto. Rather, this is about a vision of where consumers, including US dollars, are on a chain and used for a wide range of transactions. So merchants have been able to accept cryptocurrencies for years, but acceptance usually means that settling in a non-stable cryptocurrency, swapping out one intermediaries for another, and taping together square pegs and round holes, it doesn't need to be like this. So when a customer buys something, it's a vote of support. A merchant should reward that with support, with personalized offers, on-chain loyalty program, and a unique virtual good to accompany physical purchase. So the opportunities are limitless, but only if there's new approach to payment. And this is what Solana is trying to do with Solana Pay, a new approach to payments. So last year I joined Solana Labs to finally bring this vision to reality, with a foundation laid thanks to the work of early supporters of Circle. So you can actually read up more about Circle's take on Solana Pay. Checkout.com, Sitcon, Phantom, FTX, and Slope, the opportunities and offers now made to start a conversation and what comes next with Solana Pay help us bring a life of decentralized payment network that will define this era of payment. How interesting is that? So if you're interested in learning more, find out more at these website about pay for website for merchants, pay for websites for developers. It's quite interesting. Unlocking digital currency pay for merchants worldwide. And obviously this just gives you more information on the idea that they're trying to capture the reality of what they're trying to capture with Solana Pay. How they want to enable near instant settlements at near zero cost of your cryptocurrency. So essentially you can pay for goods, it costs you barely anything, and you get rewarded when you buy goods from the brand that you like. You get rewarded in the form of NFTs, and you get added to their community system where you can keep up to date with what they're doing. So that's quite interesting. So that's Solana Pay for everyone. It's really interesting. My question is, what is Circle? Now it does sound quite familiar. Sounds like I've heard of Circle before. So naturally, I am really curious. Let's see if there's a coin to support Circle. So there's Merit Circle, Circle Swap, NFT Circle, Circle Pod, Scene Circle, Fan Circle. List goes on. Okay. Well, apart from that, yeah, let's go on to our next video. Let's go on to our next topic. Switzerland-based index providers offer DeFi exposure. That's interesting. I'm willing to check that out. Former YouTube head of gaming, Polygon CEO, on the future of blockchain integration. So that's some news in the Polygon space. So that's good. Miami family office back in NFT fund launch helmet by fine art collector. Interesting. Solana payment processor raises 15 million on promise of instant settlements. So that must be some more information on the Solana Pay. Quite interesting. A Solana crypto payment processor closed a 15 million venture round as demand for the proof of stake protocol lingers after its explosive growth last year. Yes, I completely agree. Solana had an explosive growth, but more than explosive if you ask me. So the next thing we'll be talking about is Polygon. We've got some news on Polygon. We'll probably also dive into this news on Switzerland-based index provider offering DeFi exposure. This is good because this is like the stocks and shares market. There's lots of index funds, and they're trying to find a clever way of basically offering exposure to more of the crypto world, because they're seeing that the crypto world has huge potential and they want to be a part of that. Web3 startup Alchemy raised 200 million to fuel blockchain development. Wow. I think I might have spoken about Alchemy quite recent actually, but if I've got no problem with talking about it again. What is Solana? Learn everything about Ethereum rival. Ooh, that's nice. Ethereum rival. Well, whoever calls Solana an Ethereum rival, you're absolutely correct. Privacy mined blockchain Alio raises 200 million prior to mainnet launch. Alio? Is it Alio or Alio? Well, let's check it out. Well, of course, they're probably not on CoinMarketCap because they haven't gone live yet. But it's worth checking. Like I said, we're gonna talk about Polygon next. But I'm curious about this this Alio, whose raises this Alio crypto or Alio company whose raises 200 million prior to their mainnet launch. This is big. Polygon closes 450 million raised by Sequoia India. Interesting. And on CryptoPunk owner launch NFT fund, betting on the ability to over-identify. How interesting! Really interesting. So I'm actually I'd like to check out this Alio before we get into the Polygon news. And what I'm mostly curious about is if it's promising in any way, because I've never really heard about this Alio, right? So I'm curious, and obviously seems like they've got an upcoming mainnet. Zero knowledge is finally here. How interesting. Alio. So this is the ICO token sale. Says token sale is coming up soon. That's interesting. They've got a white paper. I could check it out. So it's an ERC20 token. So looks like Alio raises 28 million to build the future of private applications. This was last year, like early last year, April. So this news is almost 1 year old. There's nothing wrong with that. There must be some later news in the Ecosentifies testnet, retrospect, bringing zero knowledge to the world, intro to Leo programming language. Interesting. So there's also the tokenomics, introducing Alio feature bundles. So this is definitely something that we can check out, and we'll most likely check this out after we go through that's after we go through Polygon, some recent Polygon news. And apparently they got a white paper. This white paper is slightly different from what I expected, but nevertheless that's fine. So I'm actually clicking on welcome to Alio. I'd like to just like read like what it is, but I might have to just Google that. Not a problem. Anyway, let's get on with our Polygon news. Oof, $1.45 for Polygon right here. Oof, it's been quite volatile. It's been quite volatile within the last month. I mean, that's volatility. But you know, one thing is it's not making any major moves, I'd say, because even in the last 3 months, yes, it's been up to $2.87. It's been as low as $1.30, $1.34. Really interesting. Sorry, I just had to yawn right there. You know, it's actually quite late for me, but so I'm actually quite tired. But nevertheless, we've got news to report. So it never stops. But yeah, it's been very volatile for Polygon, but I'm not certain that's a bad thing. I mean, take a look at the entire year, the last year of Polygon. Like up until this was what, April? So up until April, it was actually relatively super low in price, and towards the end of April, it just immediately shot up to around $2.45. It looks like people just realize that they were missing out on something that had huge potential, and they just jumped at it. But nevertheless, you know what? There's one thing I can say about Polygon is that it looks like a crypto that's really good for trading, because all of these moments of swings, these moments of volatility, there's a lot of money you could make when the price going up, and that seems to happen quite a lot. That's what we mean when we say volatility. So that's actually a good thing for a lot of people who are actually trading Polygon, and they're probably trading Polygon in a much different way than we can ever expect, because obviously the thing about Polygon is that even if it's $1.45 right now, it's not going to go to $5 anytime soon. It's not going to go to $10 anytime soon. So the margin that people can make from this crypto is relatively small. So a lot of people, even though they're investing, they're also being extra careful, and a lot of people are probably investing, especially right now, because the price is good relative to the entire year, relative to its long-term potential. And obviously there's 75% of the token in circulating supply. That's bloody amazing, considering just how much tokens there are in the supply. That's really amazing. So let's get into some of the latest news. Allow me to just take a drink of water, because I have to stay hydrated when doing this job. That's it for my cup of drink of water. What am I saying? Anyway, former YouTube head of gaming, Polygon CEO, on the value of blockchain integration. So Polygon Gaming is the early stage. Well, it's in early stage. There is natural volatility, like I was just talking about, just like a lot of volatility. Ryan Watts told Blockworks, but look at the alternative model for users. It cash in and cash never out. Interesting what they're saying. So what they're saying is, like, a lot of people are putting cash in, not a lot of cash are coming out. But if it is volatile, then doesn't that just contradict that statement right there? Yeah, that kind of contradicts that statement. Anyway, so Ryan Watts announced his new role as Polygon Studio CEO on January the 25th. Now, Polygon Studio partners with artist Beeple, DOS and Gabbana, DraftKings, and OpenSea. So Ryan Watts first heard of NFTs when he noticed an influx of venture capital flooding into the traditional gaming space from firms and hedge funds last year. Sequoia, Tiger Global, and Andreessen Horowitz all invested in millions of dollars in the gaming space in 2021 alone. Wow. Yeah, a lot of money. It's just been like pumping into this space, and honestly, it doesn't seem to be slowing down anytime soon, does it? I mean, I'm not upset with that. I'm happy with that information. I'm genuinely happy. Anyway, what was YouTube's head of gaming for Upward? My apologies. What was YouTube head of gaming for upwards of 7 years? And he said he's never seen VC interest in this caliber in the industry. NFTs, non-fungible tokens, then quickly caught his eye for the first time, or long-term use cases in gaming, particularly as a way to prove verifiable ownership. So last month, what joined Polygon Studio as the blockchain startup's newest CEO. Polygon is a protocol and a framework for building and connecting Ethereum-compatible blockchain networks. According to its website, the company has had big-name partnerships with NFT artists Beeple, DOS, and the list goes on. So Blockworks' Morgan Chittum spoke with Watts about emerging NFT use cases, so the value of blockchain integration in gaming, and what makes a play-to-earn game financially sustainable. So as for Chittum, how do you think play-to-earn projects and gaming companies can ensure players stay interested without the money taking over the player's sole interest? Interesting, because play-to-earn model is the idea that people get into the game because they want to earn money. But how can you be sure that that majority of people are not just playing because they want to earn money? You know, that's basically what that is saying. But at the same time, if people are playing your game because they want to earn money, when your game is about making money, then that's ultimately a good thing. There's nothing to complain about in that sense now, is it? So what's then replied? Blockchain gaming is in an early stage. That's true. I'll have to agree, obviously. And there is a natural volatility that comes with that. So when you take an open and free market like this, it comes with a lot of good and bad. But look at the alternative right now. The alternative, cash in and cash never out. Basically what they're saying is if people are playing to earn, at least they're putting cash in, and they never intend on really leaving, because why would you leave a system that's paying you to make money? Well, paying you to play, basically. You play to earn money. Why would you ever want to leave that system? It's kind of like Axie Infinity. You know what? I really like Axie Infinity, and I haven't started playing Axie Infinity yet, but I will. I am taking it even more serious because I think this is the perfect time to play Axie Infinity, because Ethereum is dropping in price. A lot of cryptos are dropping in price, and some of the base price for these Axies are like $24. $24. It's absolutely incredible. So the idea of minting or breeding new Axies is absolutely fantastic. So if I get into a game like this, I'm not going to want to leave anytime soon, because I invest for long term to breed Axies, and there's people out there that are breeding, as you can see, thousands of Axies, and they're NFTs. An Axie is an NFT, but the incredible cheap price of $24 per Axie. So if you want to start playing this game, it's just going to cost you less than $74 or $75 on average. Once again, not financial advice, but it's really cheap compared to where it was last year. I think at some points it was like at around $1,000 just to buy 3 Axies. Just to buy 3 Axies. So yeah, that's a good investment. Anyway, so this cash in and cash out system that what is talking about, he's right, because it works. If people get in to earn cash, they're not going to want to leave anytime soon. And one of the best time to be in the market is when the price is down, because it's cheaper to be in the market and just wait until the price go up again. It's a long-term investment. So additionally, what also said, I think like having governance token and allowing communities to really weigh in on development decisions, micro level decisions, and having users feel like they're a part of thing can help. Over time, this could help user base build up and provide a more stability. That's good, because all crypto needs stability, but especially crypto that people rely on mostly. You know, there's cryptos like Bitcoin that we don't really care about volatility in Bitcoin, because it's just not going to be stable at any time during its history. Bitcoin, when people do buy Bitcoin, we're thinking about holding it for a long time, so we're not really worried about volatility in the short term. Not really. So additionally, we got some more information. It's a long conversation that we can go through. Really interesting stuff, by the way. So we're looking at what other use cases that excites you right now. Excuse me, everyone. I just had to sneeze, so I just had to turn off my camera, turn off my microphone, because I did not want to disturb anyone who's watching this stream. So what's response is basically, this is going to be a big year for music NFTs, and he is right. You have the ability to have an NFT and put utility behind it now, whether it discounts on ticket, meet and greet, or whatever cases you might be, and that artist has the autonomy to do so. That autonomous capability is really cool, by the way. So NFT creates less of a resistance on big music studios, and I think the music industry is fundamentally flawed and at a disadvantage to artists. So much of the spirit of decentralization in Web3 is giving power to users and creators. This is the opposite of a lot of mantras of Web2. Interesting. And that's what we're dealing with right now. So in response, Chickton basically said Farmville creator Zynga said that they will launch a blockchain-based game this year. Um, that's big, by the way. That is big, by the way, because they're such a traditional company. Like, you know, we know what Zynga Poker is, and we know what Farmville is. You know, we know what Candy Crush is. We know what these iOS games are, these mobile games are. So it's really big to see that they're really interested in blockchain games and in NFT integration. It's really interesting. So they want to launch a blockchain game base this year, making a separate studio to prevent any confusions with players. So Ubisoft additionally has reported of employees resigning over the possibility of having in-game NFTs. Where do you think this potential tension and desire for separation between the two comes from? That's interesting. So basically what they're saying is people are leaving their jobs because they don't want to be a part of the crypto and NFT space. That's crazy, right? That's actually kind of crazy. I'm shocked. So it basically says Ubisoft had reports of employees resigning over the possibilities of having in-game NFTs. What the hell? Who are these employees that are like getting so offended because they don't like NFTs? What the hell? They're gonna be the saddest person in the world if you don't like NFTs. Like, what the hell? I'm so confused. Anyway, what response was basically there's some necessity context of why they're separating church and state inside of these companies. Obviously, there is a subjection of gaming market that wants blockchain games, and there's a section that's trying to preserve what they love. Interesting. So there, some employees might be passionate about games that are like old-fashioned games that, you know, don't worry about this play to earn, this NFT world, blockchain this, blockchain that, and obviously metaverse is becoming a big thing, and a lot of people might not like that, which is interesting. They're trying to protect what they're used to, what they know, what they think is best. But you know, in doing so, there's nothing wrong with protecting what you have or what you had, but evolution, you know, evolving, you know, change, it will happen. So basically his response was, I think the big mistake around a lot of polarizing conversation is that I'm seeing people thinking of absolute terms of what blockchain games are. There's a lot of things that we need to do as an industry in Web3, particularly with carbon footprint and with making sure that we're addressing scam and underlying issue that are happening in the NFT market. However, what I think we'll see over time is that all these studios desire to launch a blockchain game. It's most likely to new intellectual property or a new franchise entity or a new franchise entirely. Studios will eventually be able to serve the total addressable market of gamers. Chicktum additionally said, and Chicktum is the interviewer, when was the first time you heard of the word NFT? Where were you? What was going through your head? And he basically said it was last year. Started to see a lot of developers fundraising from big ventures capitals for the first time in really in the history of gaming industry. You saw a lot of capital for video games coming from big venture capital firms. There are a couple of edge cases for this one, but this influx of capital was pretty significant. So much of the gaming industry in the past largely came from other game publishers funding these projects or these studios. Interesting. So there's a lot of people getting involved in gaming and blockchain and play to earn video games that were never interested in it before. Capital venture firms, you know, hedge funds, businesses that were never interested in video game, and they're still not interested in video games, but they have noticed that there's money to be earned. So now they are definitely interested in video game. And this is some of the things that the Polygon CEO had to share his opinions on, and I appreciate it. You know, it's quite interesting to see how people are reacting to the change of crypto. Now, so it looks like Polygon has recently given us some updates on their website. I like this because I remember the last time Their website looked a little bit different. Now this is a 3D graphics art. I really like that. Obviously, I do a little bit of 3D designing. I'm really big on 3D designing, so anything 3D designing related, I love it. Over 7,000 dApps have used Polygon to scale their performance. Damn. So imagine you have a dApp or you have a crypto and you want to scale your performance. Well, Polygon is the service. Polygon is the network that you can use to scale. And what we've noticed is that there's going to be a lot of people who want to use Polygon to scale, because who doesn't want their platform, their crypto, their dApps, their DEX to move faster? This is brilliant, absolutely brilliant. So some big news. Polygon raises 450 million from Sequoia Capital India, SoftBank, Galaxy, Tiger, Republic Capital, State of Governance Decentralization, Burnmatic. Wow, I don't know what that is. How interesting. But what I am interested in is this Polygon developer ecosystem hits new milestone with over 7,000 dApps. That's actually incredible. This is absolutely, and it constantly keeps on growing. Imagine where we will be with Polygon in the next year, 5, 10 years. You know, this number is going to continue to grow, which means that their value as a crypto will continue to grow. So Polygon has reached a new adoption milestone with over 7,000 decentralized dApps running on their network as of December, more than double the number 3 months prior. Data from Alchemy, the world-leading Web3 developer platform, shows the skyrocket popularity of new applications in decentralized finance and non-fungible tokens brought with it congestions and soaring price on Ethereum mainnet last year. So much of the activity shifted to Polygon to take advantage of low fees and high throughput. By October, the network was hosting over 3,000 dApps compared to just 30 year earlier. That's interesting. Compared to just 30 a year earlier. Oh, I see. So 1 year ago, since October last year, it was just around 30 dApps on Polygon. Now it's over 7,000. Excuse me, just for a moment. So let's continue. So the number of teams building their projects on Polygon proof of stake has doubled every month from mid last year, according to Alchemy. The number stood to more than 6,000 at the end of December, up 43% from the previous month, and the influx has pushed up usage 74% in the same period. Wow, that's what I like to see. So Polygon's broad range of scaling options and some of the industry lowest transaction rates have made it a destination of some of the biggest Web3 platforms and developers, from DeFi projects such as lending platform AV to luxurious brand company Dolce & Gabbana, and NFT marketplace including OpenSea and Mark Cuban's Lazy.com. So in December, Uniswap community voted overwhelmingly in favor of deploying V3 of its protocol on Polygon, joining a already flourishing DeFi ecosystem that already includes blue chips like Curve, OX, Balancer, and 1inch. So many teams have also chosen to build solely on Polygon. Alchemy data shows that 55% of projects have integrated exclusively on Polygon compared to 45%, which is also deployed to Ethereum. So more people are choosing Polygon over Ethereum. We never thought we'd see this day and so soon, but apparently more people are choosing Polygon, and why wouldn't they? Because it's a much cheaper platform, faster, and they do almost the exact same thing, but it's even better with Polygon because you can scale your own blockchain apps on dApps. While on Ethereum, it's such a congested network, the benefits of Ethereum is it's limited because of the congestions. So Polygon proof of stake adoption soared exponentially with 1 billion transactions recorded last year. That's in 2021. The network's more than 130 million unique addresses and over 2.6 million monthly active users now generate some 3 million transactions per day, more than double the value of, sorry, my apologies, more than double the volume of Ethereum. I'm sorry, what? Wait, wait, I struggle to believe that. So I struggle to believe that, right? I struggle to believe that. So over 2.6 million monthly active users now generate some 3 million transactions per day, more than double the volume of Ethereum. I don't know about that. I don't know about that. I don't know about that. Obviously, even right now, the 24 hours trading volume for Polygon is at 1.4 billion. That's insane, by the way. I mean, I'm not wrong. That number does say 1.4 billion, almost 1.5 billion, right? I mean, I have to double check with everyone who's watching this video because that's 10 numbers. Anyway, now if you go on Ethereum, I promise you it's much bigger, much bigger. Look at that, 13.5 billion in transactions in the last 24 hours. So while I'm reading this article, what it's saying, it might mean it in a slightly different way. I might be interpreting it. Yeah, I think so. I might be interpreting this this information incorrectly. I'd say incorrectly. Anyway, 7,000 plus applications choose Polygon to scale. I like that. This absolutely incredible. I mean, just look at that. It's blowing up, and it's not gonna slow down anytime soon. They want more people to join the ecosystem, and they want more people to submit their projects to the Polygon ecosystem. I think it's brilliant. I think Polygon is brilliant. It's going to continue to be brilliant for a long time to come. In terms of the price, I think the price is at a perfect place to be because it's so incredibly cheap. And a lot of people who've always wanted to get involved in Polygon will be using this opportunity to their advantage. Yeah, to their advantage. So, in other news, we wanted to have a look at Aleo because they have a upcoming ICO quite soon. Now, I have no idea what Aleo is, but I intend on finding out because obviously they've got an ICO coming up, and I don't think I've heard of Aleo before. We also want to have a look at some of the latest news. I don't want to go too far back into its history because I don't want to make this video too long. I want to keep it short, sweet, simple, you know, short, sweet, simple. So we've got some news for Aleo. That's what we'll be taking a look at. But before we can do that, perhaps I should take a drink of water because I've been talking quite a lot. So forgive me. Right, I am back. It's my drink of water. Done. Privacy-minded blockchain Aleo raises 200 million prior to mainnet launch. So the capital raise boosts the platform valuation to 1.4 billion following the 28 million Series A led by A16 ounce in April 2021. How interesting. So we're going to go through that a little bit. And that's not the, so that's news in the ecosystem. Yes, good. That's news in the ecosystem. But we have other things to discuss, such as what is Aleo, a tokenomics. We can have a look at the tokenomics of Aleo. We can also have a look at this 200 million that was raised. I'm curious. I am truly curious. So let's start with Aleo itself. What exactly is Aleo? Alio archives this by leveraging decentralized system and zero knowledge cryptography to protect user data on the web. So at its core, Alio offers users and application developers onboarded compute with absolute privacy. By by architecting Alio as a blockchain that is private by default, open source, and built for the web, they believe that Alio is uniquely positioned to address the shortcoming of blockchain adoption. With Alio, users have access to a world of truly personalized web services, giving up control of their private data. So they believe Alio will reshape the role decentralized system play in our society and introduce new experience never before seen on the web. So Alio was born from a desire to achieve the impossible, to build a user experience on the web that is both truly personal and truly private. That's interesting. It's a mouthful. It's a lot to do. That's a lot to achieve. So the challenges of the ecosystem adoption, what are those? So for most, blockchains are just a concept. They are used by a small proportion of technologists, activists, and spectators. While most blockchains are permissionless, it does not mean that they're accessible to all, and the concept and thermal logic introduce real barriers. So many call this a onboarding problem. It's a more fundamental than that. So for example, the notion of building smart contracts mixers and dark pools on Ethereum remains flawed. With privacy, these applications cannot fully protect user activity. It simply does not work. So for both companies, the benefits of running business, logic, and data on globally consistent platforms are compelling. Yet the lack of privacy is a fundamental barrier to complying with operational guidelines to achieve real-world adoption, and we need a blockchain that are private by default. So second, technologies should not be developed for their own sake. So to us, a technology is worth its development when it solves a real-world problem. Instead, many blockchains are built as a solution in search of problems. We believe you have to start from your user experience and work backwards to the technology. The best technologists are easy, even joyful to use and make the world better. I think this is well said. And I think it makes a lot of sense. Now it's built for the web apparently, unlike existing solution that seeks to replace it. Alio is designed to integrate with it. For users, Alio introduces a new experience that both truly personal and truly private. Something that we've already basically read. But it looks like they've got a lot of things that are coming, and it looks like it's been in the development for a long while. But even more important, as the blockchain industry continues to evolve, it's proven its potential to support a digital system defined by accessibility, efficiency, and interoperability. Aaron Wong, investor at SoftBank Investor Advise, said in a statement, the platform is planning to launch its mainnet later this year. Huh? So that's probably like Q3 or Q4 of 2022. So that's truly late during the year. So a privacy-minded blockchain network has raised 200 million in preparation for its mainnet later this year. Alio's Series B funding was led by Cora Management and SoftBank Vision Fund 2. Other participants include Tiger Global, C Capital, Slow Ventures, and Samsung Next, and Andreessen Horowitz, a 16-ounce. So Aaron Wong of SoftBank Investment, in a statement, said that the next generation of blockchain technology will be defined by accessibility, efficiency, and interoperability. So they believe Alio is building the foundation layer and will ensure that the future of Web3 is scalable, safe, and secure, enabling a range of applications such as gaming and financial transactions, Wong said. So the capital raises boosts the platform valuation of 1.4 billion following its 28 million in Series A led by A16ounce in April 2021. So as the platform works to launch its mainnet later this year, the funding will be used to develop products and services to build out an ecosystem on top of its decentralized network. The two biggest challenges in the blockchain space are privacy and scalability. That was said by Daniel Jacobs, founder at Core Management, said in a statement, Alio is building a fundamental layer that addresses both, which we believe will help the catalyze and grow the next generation of truly mass market uses in blockchain, from gaming to DeFi and beyond. So unlike other blockchains like Ethereum, Alio transactions process off-chain and only verified by network nodes. So the setup allows the platform to support high transaction volumes, empowers developers to create decentralized applications or dApps that addresses complex use cases. So our goal at Alio is to build the foundation for the next generation of decentralized web applications. Howard Wu, CEO and Chief Technologist Officer, Alio, said in a statement, "We want to use technologies such as zero-knowledge proof and blockchain to create an ecosystem for developers that enriches and empower users' capabilities on the web." How interesting. How interesting. I like that though. I do like that because we do need more development on the web. We do need more development within the blockchain space. Excuse me. So let's get on to the tokenomics of Alio. So first, what is the unit of account in the Alio network? We dub these Alio credits. These credits are used to pay transaction fees similar to Bitcoin and are anticipated to be preferred currencies of provers who expect to run as L2 providers on top of the network. More on that later. So similar to AWS credits being exchanged for cloud service, Alio credits enable access to a key computational resource in next generation zero knowledge compute. This is defined as computational inside a snark VM, which inherently uses zero knowledge cryptograph to provide fully private and permanent applications. Zero knowledge cryptograph uses proofs, which describes and attests to an outcome of program represented as a circuit. So the circuit themselves are denominated in gates, and so Alio credits represent the cost of computing some fractional portions of the zero knowledge proofs. Interesting. So that's it's quite simple to understand. So it looks like there will be 1 billion Alio credits. So that's the utility token that can be used to pay for fees on the network. And it looks like there will be an inflation schedule. Wow. So that's quite interesting. So the crypto will become rarer over time because it's losing supply over time due to inflation. How interesting. So the value of your tokens will go up instead of like traditional money like the dollar, the pound, the yen. Our inflation goes, it allows our money to lose value because we're adding more money to the circulating supply, while Alio is removing money from the circulating supply, thus increasing the value of said money that we hold, or said cryptos that we hold. So interesting. And also Alio emission and total supply. How interesting is that? I do like the concept of introducing a inflation model. I think it's smart. So at launch, it looks like early backers, 57%, 20% to teams, 15% to public, and grant will be getting 8%. And after 5 years, 33% to backers, 11% to teams, public will have 55%, and grants will have 1%. I'm not so sure how this will be allocated properly, but it does say over time, as new credits are minted, the distribution will change. So I see. So the distribution will change, and thus the 5 years period from launch to 5 years later, the portion that is held by public, early backers, and teams will be different because new credits are being minted and the distribution is being changed as we gradually continue in this world of crypto. So keep in mind that the charts only account for inflation and does not account for cases where any of the initial holders sell their tokens. So as a result, the actual distribution of the tokens will likely be wider than the simply representations below. I think that's a good explanation because they're right. People will sell tokens. Some will be early backers, some will be teams, some will be public, some will be grants. But we have no idea how that will affect this token chart. We have no idea until it actually happens. Yeah, we have no idea until it actually happens. But for everyone who's wondering, that, my friend, is Alio. Zero knowledge is finally here. Webull applications become private. So it's quite interesting how they're trying to change the landscape and the user experience of the internet, of the blockchain. It's really interesting. I wonder what the blockchain will look like in, like, say 10, 20, 30 years. It's going to be interesting for sure. So there was definitely some other things that I wanted to look into as well, such as Archemy. I'm pretty sure I've reviewed Archemy before, but the question is, have I reviewed it lately? That is the prevailing question. Now, additionally, the thing is that I have to get the right Archemy, so it might as well we go to the website directly, because so this is the website. It does look quite familiar. I do think that I might have like reviewed Archemy before. Yeah, I think so. But there's nothing wrong with reviewing it once again or finding out more about it and learning what's going on in the ecosystem. And obviously, even visiting the Archemy blog can probably teach us some good things. Growing with the community. That's Archemy raising 200 million to support Web3 devs. How to create an NFT. So these are some of the information that they provide on their blog. It's quite good. I got no problem with that. In fact, if anything, I applaud that. How to get historic transactions on Polygon. Interesting. We were just talking about Polygon not too long ago. But I do want to have a look at this a lot closer. But I'll also like to understand if I've got the right Archemy. And I don't think I have. I do not think I have the right Archemy. And I don't think this is the right Archemy either. Not at all. So the question is, do they have a token? And if they do have a token, how do I find it? I mean, they must. They must. They must have a token, unless of course they haven't gone live yet, which is completely possible. Looks like they've been mentioned in a number of different news outlets, which is quite good for them. But what I'm even mentioned in Axie Infinity, Superware. But where I'm mostly interested in is the coin token itself. I can't seem to find it on CoinMarketCap, so that's quite interesting. It does put us into a slightly awkward situation, but never fear. We've talked about like 3 cryptos so far, which is quite good. But here's a strange thing. I'm almost certain that I've talked about Archemy before. So I'm actually gonna search for it on YouTube, because I'm so certain that I've talked about Archemy. So I've talked about Archemy Pay, but it doesn't seem like I've talked about Archemy. Perhaps I've heard of it before and I just like never reviewed it. But yes, definitely definitely heard about Artemi Pay, but it looks like this is the first time that I will be talking about a different Artemi. So Artemi Pay and this Artemi, completely different. So that does put me in an interesting position, because I actually was quite interested in like reviewing it, you know. But maybe I can't, which would be quite unfortunate. But nevertheless, it does happen sometime. But in other news, Switzerland-based index provide offers DeFi exposure. Compass Financial Technologies Index will offer exposure to 10 DeFi tokens. That's interesting. 10 different tokens. I must say that's it's quite impressive. It's brave. It's good to see. Got no complaints from me. Just would like to see more traditional finance introducing something similar. Honestly, that'd be kind of perfect to see more like traditional companies introducing something similar, because people out there in the traditional world who basically like want to expand into the world of crypto, and they're always looking for new ways to advance in the world of crypto. And index funds, this could be a perfect way. So Uniswap makes up a third of indexes, while AV, SushiSwap, and Loopring exceeds 10%. Compass Financial Technologies plans to launch thematic volatility and option based on multi-asset indexes. And this is in 2022. A Swiss index provider has launched an index offering exposure to DeFi token as a crypto investment vehicle continues to proliferate. So Compass Financial Technologies indexes have about 5 billion of assets that are tracked by ETPs across Europe. Appetite for digital assets exposure through institutional quality solution is growing significantly. CEO Guillaume Leifer told Blockwork, we have clearly identified the DeFi theme as one of the fastest growing sectors in the crypto industry, and indexes are designed to offer broad and diverse exposure to this sector. So the indexes first sets institutional products that determines weighting by tracking tokens, liquidity, and revenue produced by DeFi, decentralized finance protocols via on-chain data, and according to firm, the largest allocation to Uniswap with a weigh-in of roughly 33%. How interesting is that? So this would be the last. So this is based on last allocation. So the index can be used under a license agreement by issuers in the country, subject to local regulations. It is compliant with EU benchmarks regulations and is live on Bloomberg's as well as Refinitiv. So latest comes as crypto offering continues to multiply in Europe. So Compass partners with CoinShare in June 2020 to create the CoinShare Gold and Crypto Assets Index, the first EU benchmarks regulation compliant indexes combine crypto and gold. So CoinShare more recently launched 2 crypto ETPs, exchange and traded products designed to share staking rewards with investors. Wisdom Tree and 21 Shares have continued bringing crypto ETPs to European markets, with the latter planning to support what it considered to be the top 50 cryptocurrencies by the end of the year. So 2022 should be an important year for us in terms of index offering, with a new thematic basket index, volatility options, and base indexes and multi-asset indexes. Wow, it's quite a lot. That is quite a lot, but that's big news. And that's some of the big things that are happening in Switzerland. Switzerland has always been known as a place that is really good for like banking, private banking. So to see them like embracing cryptocurrency with index funds, I'm taking note. But I'm also holding criticism because I like the idea of this. I want to see this. I want to see this more often in the world of crypto. I want this to be a normal thing in the world of crypto. But it looks like I can. The thing is that finding an explanation for Archime is probably like super easy. But I want to get a full article on Archime so I can like fully understand what they're about. And obviously there seems to be a YouTube video that can help with understanding Archime, but I'd love to get a more in-depth understanding. Anyway, I'll probably check out Archime at another date. I'm just gonna save it to my Altcoin folder so we can basically talk about Archime another time. But honestly, let's go back to Axie Infinity because I'm super excited for Axie Infinity and where it is right now and where it could be in the near future. Yeah, I'm absolutely excited for that. And I must say, I've got my first Patreon, so thank you to my first Patreon. That was actually quite recently, and I did not expect it, but nevertheless, I'm super grateful and obviously looking forward to providing exclusive content to my. I've already started providing exclusive information and content to the Patreon, and I intend on doing it even more exclusively, and increasing that in coming months, in coming weeks. So it's gonna be interesting. That's some interesting stuff that'll be happening. But I think I will be ending this stream right about now because it's getting quite late. And with this stream, I wanted to try something new. I wanted to just like try something new, and that's what I've got to try, like just reviewing. We're talking about a bunch of different cryptos, and essentially we're gonna go back and split those up and re-upload them to the channel so everyone can get the information, because not everyone is gonna watch this entire video. So we have to download it again and chop it up and basically upload it back to people in smaller bits and pieces, so everyone can get the full picture. And it benefits me as well because that's more videos for me, you know. So yeah, thank you for watching. Subscribe to see more, leave a like, leave a comment, and of course I will see you in my next video. Subscribe.